On today's episode of Boundary Breakers, I sit down with Rob Finlay. Rob is a commercial real estate entrepreneur, serial entrepreneur, started his career on Wall Street and has since started several technology startups with regard to commercial real estate. Now runs a company that owns, operates, provides technology for commercial real estate. Rob has some really interesting insight about the commercial real estate market, what's led to his success in the industry, leadership secrets, and a peek around the corner with where he thinks the market is headed. I think you're going to enjoy this episode. Boundary Breakers is brought to you by Carter & Clark. Rob, could you just take a few minutes or whatever you're comfortable sharing and just let us know, tell us a little bit about your background, where you came from, where you grew up, what family life was like.
Sure. So I grew up as a typical kid in rural New Hampshire, with aspirations of trying to get out of New Hampshire as soon as possible. Right, a small town kid. My dad and mom ran a small commercial real estate brokerage shop, so I basically grew up in commercial real estate. But I had sights on going to Wall Street. I was a product of sort of the '80s, right? So it was late '80s, and so Wall Street was really popular. The movie Wall Street, and I just had visions of this big international corporate finance. Unfortunately, my grades were not quite that of one that was going to end up going from New Hampshire to Harvard and then on to MBA school. So the road might have been a little bit easier had I worked harder at school. But basically, I grew up in New Hampshire, went to school in New Hampshire, went to school at what was New Hampshire College, is no longer there. But went to New Hampshire College and actually, by the sheer grace of good luck, actually was able to get out of New Hampshire and go on and actually ultimately get to Wall Street, where I worked for Lehman Brothers and Credit Suisse First Boston. So, sort of
Nice.
an interesting way to grow up from the rural side to all of a sudden going to the city.
Yeah. No, that's great. So out of school, you did the investment banking with Credit Suisse and Lehman Brothers?
Yeah, so actually, the first stop was actually at a regional bank in New Jersey. So if you can imagine this, once again, as I said, I grew up in New Hampshire, never really left New Hampshire, and my first job was in what they would call the armpit of New Jersey, in a town called Edison, New Jersey, and it's a wonderful area, and it's not doesn't deserve that kind of name, but my poor mom was thinking, oh, geez, here's her little baby going from New Hampshire, where he knows everybody and everything, and all of a sudden going to the big urban area, but down to New Jersey, learned the world, and I think this is where, if you look back at your life, things that change, and there's a lot of things that have happened to me in my life that are big moments, but one of them is at this time when I went to this bank. It was really a dynamic shift in technology. When I first was there, spreadsheets were new. This was back when, this is, truly dating myself. There was a thing called Lotus. It wasn't Microsoft Excel. It was Lotus. It was called Lotus 123. And if you were really fancy on it, you had this thing called WYSIWYG, which is what you see is what you get. All your young audience is going to be like, what the heck is this stuff? It was at a dynamic shift where technology and innovation, those who were using the technology and innovation really set themselves apart from those who did not adapt. And so if you think about it, if you try to translate that to today, and a big sort of push of what I say is all about innovation. It's embracing innovation. I don't care if you're 20 years old or 18 years old or 65, 70 years old. You have to be observant to what's going on around you if you want to stay and be active or be competitive in this world. You must be up to speed and embrace innovation and technology. And that's fortunately what I did.
Yeah, that's fascinating. So when you say that embracing the technology and standing out, are you referring to sort of within the bank? Those those within the bank that were able to leverage, or were you talking about the bank in general? Or?
Yeah, the bank in general. So to be able to really separate myself, I was one of one or two very young analysts in a group of filled with traditional middle-aged bankers, and being able to utilize spreadsheets, being able to run calculations and showing the power of this stuff really set me apart and actually really assisted to a rapid growth with inside that organization. I was promoted quickly, moved up in ranks, and really had an incredible experience that I think it would be hard to replicate today. Just the way of where organizations are, but yeah, I was meeting with the CEO and the head of credit, and these are 21, 22 years old. I barely knew nothing, and yet because I could use technology, and they embraced it, and they were in awe of it. Just like today, when people use AI and they use some of these other sort of models and things that they use to accelerate their job. It was the
Right.
same, it's basically the same thing for me. So I was able to do that, and ultimately get promoted, but also get exposed to things that outside the bank, like securitization of assets and things that led me to get and be trained to get to my next job, which was ultimately Lehman Brothers and then Credit Suisse First Boston.
Yeah, that's interesting. And um, there's a lot that goes into that, right? So it's not only you have to know how to be willing to learn and engage with the new technology, in that case, the new software, but also, I'm imagining that you provided some visibility to the executive team that they previously either had to get manually or hadn't maybe not had any visibility at all. But I also imagine that you figured out not only sort of how to use the software, but how to use it in a way that provided value to the C-suite, right? And
yeah,
that comment sounds like
no, that's a great point. And I think that's an important lesson too, right? It's one thing knowing it. A lot of times, I think that it's all about translation, right? And I think no matter what we have in business, what we have in finance, a lot of it is translation, right? And I think one of the things that I've been fortunate is that I do believe I speak in a simpler tongue, right? I go back to my roots. I farm. I enjoy, I enjoy sort of the country life, and yet being able to understand complex things and being able to translate them to a more simple form is incredibly valuable. And I think a lot of people, I think that to me is where people who are successful, one of the things that they're successful in doing, and oftentimes, obviously, there's a lot of things that go into success, but being able to distill what the value prop is, or being able to distill sort of what it is that they're talking about, is a key component that really will change. And so, yes, so back to that point where it starts with at the bank taking these complex models that we were able to build in Lotus and be able to distill them down so that people can understand what we're talking about and have actionable items from that. And that is the key. And that actually led to me to my first business, which was a company called Defease with Ease. And it was called Commercial Defeasance. Our slogan was Defease with Ease, where defeasance for commercial real estate people is this very esoteric, complex process of getting out of a loan, where you're buying treasuries and government securities that will replicate cash flows, right? So it's this complex thing. And back in 2000, when I started the business, nobody had really done one. I mean, this was a very complex thing, but we were able to understand that if we could simplify the process, and not only simplify the process, but simplify the messaging, that we could be first movers and have a successful business. And that's what we did. I quit my job. I left my job from Wall Street. I left my job and opened up my first company. I was 29 years old, had no idea what I was doing. Probably fortunately, I was too stupid to realize what I was doing to go into business. But it was based on that whole premise, which is taking something that's complex, simplifying it, and producing it into the market.
I love that. I love that. And so let's dig into that for a moment. There are a lot of, I've gotten a lot of feedback. There are a lot of folks that watch or listen to this podcast that are, in their minds or in the minds of probably the general public, very, very, very successful folks, but they feel stuck in maybe a larger organization or where they are, and they want to become an entrepreneur, but they're scared. So take us back to, you left Wall Street on a flyer.
Yeah.
Sounds like.
Oh yeah, on a flyer, and with kids, family, single income family, and yes, had to stretch to make it happen. I think, I get asked a lot about this, as being what people would call a serial entrepreneur. I love starting businesses and all that kind of stuff. But I think, and we invest in businesses, and I look back and I really try to figure out, there's a big difference between being an entrepreneur and a wantrepreneur, right? And I think this I've been approached by people who said, "Hey, I want to start a business. I've been working at the bank for, you put in, fill in the blank, and I got this great job, but I as part of I want to start this business, but I still want to make good money, and I want to have the one actually had the gumption to write in the accoutrements of a CEO." I was like, "What are the accoutrements of a CEO?" And it's like, well, I expect staff and stuff like that. Needless to say, we didn't invest in that business. So it comes down to, I think entrepreneurs is more than a job. It's really a way of life. It's not about, and quite frankly, I think most entrepreneurs would tell you, you're probably better off not doing it than doing it, right? I mean, I know there's some flexibility, and yes, I am, I'm happy I'm here, and the only reason I'm here is because I got a lucky, a few times, right? There's no difference between me and hundreds, if not thousands, of people who've done startups that the market doesn't work for you. And so,
Right.
or you're right, either wrong timing, hey, I got into something and the market just collapsed, or something you didn't foresee, or all this stuff. So for somebody to be a good entrepreneur, they have to really, really want it. Have to either be stuck in a corner where you have no other solution other than to do this, or two, be brave enough. And quite frankly, I know people don't like when I say this, but dumb enough to actually do it. Because I really think if you're really, really smart, you would look and say, why in the world would I do this? All the probabilities against me. I, you know, I see how great it would be. Yeah, sure. If I was Jeff Bezos and I'm traveling around on my big yacht and everything's great, but you don't just happen. That just doesn't happen, right? You don't just scratch off the lottery ticket. And I think when we look at entrepreneurs, and when I'm asked to sort of coach and guide, I always really ask them, like, do you really want to do this? Do you really understand the sacrifice? And I think a lot of times when you look at people, one of the first questions we ask when we invest in companies is, how much of your own personal wealth is going into this business? And if it's not substantial, if it's not like, I really get hurt if this thing doesn't work out, we don't invest. We don't even look at it. And I don't care if it's $5,000 or $500,000. If you're not putting a substantial amount, if you're not willing to really risk it, why should I?
Great question. Great question. So going back to the point where you decided to make the leap, how confident were you in what you had built and sort of the value proposition? Or at what point did you say, finally get to the point where you're like, okay, this could work, we can do this, and I'm leaving?
So probably when we started making real money, right? So I think there's a lot of stages. Look, you've been in this world, so you understand. I mean, you have to be part. Yeah, I mean the emotional highs and lows of starting a business are beyond anything, right? I mean, it's I think maybe professional athletes, right, have probably the same thing. But you're living on high, and then the next minute, second, hour, day, you're living lows and wondering what you're doing. So I don't think you ever really know, like, did I do the right thing? Am I making the right choices? I think there are stages along my start that I've said, wow, this is, yeah, this is a real business. When I actually really had to pay people, oh yeah, okay, this is a real business. I really have to do this. When I had my first office space, yeah, that's sort of a real business. People coming
Yeah.
in, real business. My little business card. Ooh, I've got sort of a real business. So I think it's important if you are going to do the leap of going into business, take and rejoice in the small wins, right? Everything is a small win because quite frankly, you know what? For the first time that, I got my cards and I'm feeling like a real business, our internet went down, right? And so, or I did my first ad. I spent every penny that I had, the first ad, and didn't proofread the website and had the wrong web address, right? Those are the pain points that you don't, that you have to live. It's interesting though, the second and third and fourth and however many startups I've done since then, I think the one thing that that I that I don't have anymore, which I had before, which was this that unknown, that excitement of, am I really doing this? And I think that's sort of you sort of take that away, right? And I think maybe it's because I've gotten soft in my old age, and it's not the same. But boy, I'll tell you, those I look back with longing on those days where I was with my team. We're sort of rah rah. And, we maybe got a deal, and we're going to make it. We're going to make it. We're going to make it. So, and I think those, as you build different businesses, it's like, okay, well, yeah, we're going to make it no matter what. So I think that's sort of the journey is part of the excitement. Long-winded way to answer your question. When did I know that we actually made it? I don't know if I actually felt like I really made it until I sold that first business. When I
Gotcha.
sold the first business, walked away, that's when I said, boy, I did it. So
Gotcha. Gotcha. Your story sort of elicits what I think is a really interesting topic of discussion, and thinking about you being on Wall Street and then getting the gumption to go out on your own and having to build a team around the product. For those that have never done it before, what are your thoughts on the importance of the people that you build with or that you recruit or partner with versus the sort of quality and or value proposition of the product itself, and then sort of lump in all the other factors, right?
yeah, boy,
Maybe another way to say it is, how important are the people that you choose to work with?
versus the product you ask. Well, talk about tough questions. Wow.
I know. It's almost impossible. I get it. I realize it's almost impossible.
Right. Yeah. Look, people are critical to your business, but and this will be an unpopular statement. Um, People are critical to your business, but not one person guarantees the success like you do as an entrepreneur. So I think the most important thing is when you go into this, and I still have people that are with me. I ended up buying my first company back. So, but I still have people who have been there since day one. I have almost the entire senior team. If they didn't retire, they're still there. Um,
Wow.
but the people are important, and people improve their journey, right? So we go back to being an entrepreneur is about the journey. Having people there is great. It's fun. You want your friends there. You want to enjoy the people that you're with because you're spending all your time there. But you have to, at the end of the day, you have to look at this and say, I can't, I, if I have to get rid of all of them, I have to get rid of all of them. There's not one person that is so critical to the business that could separate the business. So that's the number one. So I think to go back, what is more important? Is it more important to have a good product? Yes. Your product, if you have truly found a must have, you solve a real pain point and you can articulate that pain point, you can find that pain point, and you can alleviate that pain point or relieve that pain point, then that to me is the most important. People, critical, absolutely critical. But if you don't have a good product and a good thing, having the best team isn't going to help you.
Yeah, agreed. And That's a pretty unfair question because I think, yeah, I don't know that you can make it without both, right?
Right.
And the reason I asked that question is because I've had lots of discussions on here about, or experiences where people say, we had this great product and I put no value on the people. I just found like anybody that would sort of,
Yeah.
was willing to join, and we ended up, not, failing or not getting there because they didn't. But anyway, it is a topic that, I think both of those could make or
Well,
break it. And
people,
you
I mean, look,
obviously,
Brendan, I mean, as well as I do. I mean, look, people it's hiring. I mean, that's, if you want to take away what's the hardest thing with being an entrepreneur, right? It's hiring. It's not finding the product. I mean, look, being an entrepreneur isn't about finding this brand new, whiz bang miracle thing, right?
right.
Entrepreneur is about doing something a little differently, doing something better, finding a niche. It doesn't matter if you make subs or you make, toilet paper. It doesn't matter. And
Yeah.
so the hardest part about being an entrepreneur is finding the team around you that will grow, believe in what you're doing, and challenge you so that you can grow and scale and be successful. And that to me is where it's all at. I mean, that's the hard part about being an entrepreneur is finding those people, because no matter what business you come from, I didn't grow up in accounting, right? I could have basic accounting, but Lord knows, and you can still ask my CPA. I did my books until I first could hire somebody to do it. Well, he spent the rest of the year fixing them all because I'm not an accountant, right? So so you don't know how to do it. So how are you going to hire? By the way, how do you hire somebody where you have no idea what that job is, right?
Right.
So you have to really, being an entrepreneur is about opening your mind and doing a whole bunch of different things in order to be able to hire for people who can do it.
That's really interesting. And, you seem to be uniquely talented on the people side of things. You've won awards for your leadership in the commercial real estate industry. Um, you've started and been part of almost countless startups and different ventures. And then you mentioned that some of the folks that you started with back then are still with you to this day. What is it that's very unique, as I'm sure that you know? Why do you think that those people have stuck with you? And what is it that you do differently from so many entrepreneurs on the people side of things?
I don't know if I do things differently. I think look, I think there's general maturity of a leader, right? And I think it comes down to where you are in your business versus where you're going. And I think, and the people that you have around you. When I was 29 years old, and I started my first business, I was hiring 24, 25, 26-year-old people. My management style was much more of a college coach than it was a professional coach, or maybe you could even. I was probably more like a Pop Warner, but maybe junior high or whatever, right? But that's how I motivated my team. I had to show them what I wanted. I was involved in every part of it. I wasn't, I didn't have offensive coordinators and defensive coordinators and this and this and this. I had to
Gotcha.
be the coach, and everything I did, everything they did, we were doing it as a team, and and that's the way that I managed them. Was as a yes, I'm a peer, but I'm also the coach, and so it became a different type of style. As we scale and we got bigger and done bigger businesses and more and all this stuff, the coaching style has to come down and change a little bit to more of a professional coach. I hire pros, pay them good money, and I expect them to do their job, right? Give them the tools, but I'm not trying to teach them how to do their job. I'm expecting them to do their job. And so I
Right.
think as an entrepreneur, I think the most important thing for you to do is to look and say, where am I? What league am I in? What are my players like? And what's the right way to coach and manage them? And it changes. I have different management styles with different businesses as well. Right. So young entrepreneurs, we're rolling up our sleeves. We're getting into it. bigger, more mature companies, say, guys, here are the numbers we need to hit. Are we going to have problems hitting that? What do we need to do? What are the things we have to look out for? Okay. And we go from there. So it all comes down to the stage that you're in.
Yeah. Yeah. So a lot of entrepreneurs really struggle going from the Pop Warner style to the professional style because they have to delegate and let go. Is that something that you struggled with early?
Oh yeah. Oh yeah. There are professional business people and there are entrepreneurs, right? And they're very, very different, right? And very few. I mean, look, you can go to all these big companies. I mean, you look at, all of them, all the big with Facebook and all this stuff, right? You have these founders, they start it, they get it going. But when you start getting into running a business is very different than running a startup. And I think that is the bigger challenge. And quite frankly, I think most entrepreneurs prefer the startup stuff than the business running stuff. And so, but knowing that as you scale your business, maybe as an entrepreneur, my advice would be, hey, you're really good. Stay in your lane, stay in the strategy, stay in where you're comfortable, and get somebody who can run that business, who is a professional, because they tend to think very differently. I have people who run my businesses now, and they think very differently than I do. They think about operations. They think logically. They're not emotional with it. They're not, they're not, flying from the hip, or flinging from the hip, whatever the expression is, right? They're shooting from the hip, I guess is the
Yeah.
way, they're not doing that. They're not coming up with, hey, what if we did this, or new business ideas. They are, this is what we do. This is our business. These are our OKRs. These are our objectives and key results. This is what we're doing. These are our targets. This is what we do.
Yeah. Yeah. So when it's your idea, right? So like take your first company, for example, when it's your idea, is there a point, was there a point for you where you had to sort of become comfortable with with letting go and become comfortable with letting others sort of,
No, you never do. I don't think anybody ever does. I think there are different parts where you have to. So when in my first business, we were, we knew we had an amazing run and we had rapid growth, like something that I wish on anybody and I wish on myself a few more times. But it was rapid, and I knew, because like most people's first business, everything I had was that business, right? There was no diversification. It was 100% diffuse with ease, 100%. It was everything I had. And so I felt like it was time that I needed to diversify. I couldn't live like that. I needed to expand. So knowing that I can't watch somebody run my business, I needed to bring in and basically promoted one of the guys who had started with me to run the business. And because it's hard to sell a business, this is entrepreneur, if you're an entrepreneur and you're listening to this and you ever want to sell your business, make sure whoever sees it, whoever's buying it, knows that it's not just you running it. And so you're not stuck there, right? And so had somebody come in, they ran it. We went through a process, ended up selling it. That was when I sold it. And basically the company that bought me was a big private equity firm out of Boston. When they bought it, I had nothing left of it. I had a small residual on it, but very little. And I was done. They put me on the board, and that was a really hard time, right? Because I knew what the FedEx packages were going out every day. I knew, I knew if one of our guys took too long on a lunch break to go hang out with his girlfriend, right? That's the way I went from that to complete hands off, and that's a hard transition. I don't know if any entrepreneur, it's your baby, it's your child,
right? It is, and I could have an hour discussion on that because you go through the whole range of emotions.
Oh yeah,
right. You have to say goodbye, and you have to grieve and mourn, and then become happy.
Yeah, it's funny that you say that. I don't think people realize that. As we go back to that, the emotional roller coaster, the emotional ride of which is of that of running a business, right? It's and starting it from scratch, nurturing it through its growth, selling it, and then wondering, what am I?
Right.
I mean,
Right.
I went through a time I sold my business and I didn't know what to do with myself. I was, I became like the most interesting person in the world. I flew helicopters, I raced cars, I flew plane, I did all this other stuff. And yet I couldn't go because I'd go to a dinner party. People are like, well, what do you do, Rob? I'm like, oh, I don't really do anything because I just sold my business. People are like, oh, okay, well, you're boring. And it's right. It's like, you're like this,
Yeah.
oh, this poor guy's just unemployed, you know, and it's hard because it defines you. And it really is, it's a big deal. And I do talk to a lot of entrepreneurs who have gone through this. And it's funny. So one thing we can all commiserate about is what that end is like.
Yeah. Absolutely. And you mentioned early on that, being an entrepreneur, true entrepreneur is not necessarily a choice. It's a lifestyle. And I think that speaks well to it, right? That
Yep.
it is your emotional identity while you're doing it. And then it gets taken away.
Yep.
And, I mean, it sounds like I'm turning it into this awful process. I mean, if you're fortunate enough to build a great business and sell it, it's not all bad,
Well, it's
right?
wonderful. Yeah, don't. Yeah,
Yeah.
if it was that bad, I don't think we would be doing it, and we continue to do it. I think that comes back to the point. Why do you think there hardly do you ever hear about an entrepreneur? They're usually a serial entrepreneur, right?
Right.
They're right because you do it because it's like it's wonderful, right?
Right.
It's bad, but it's good, and so
Yeah. It's like a drug.
right,
It's like a
it's
drug.
exactly like a drug. So it's a really good one especially if you've got if you get a good success, right? It's like, ooh, I really like that. Let's do that
Right.
again.
Right.
Yeah,
Right. Or yeah. Or maybe like, I don't know if you play golf, but I do very poorly. It's like every now and then you hit a great shot, and it's sort of that great shot that keeps you coming back. That's sort of how I feel, right?
absolutely, absolutely. Yeah. So please, yeah, whoever's listening, yeah, and all your listeners, don't think it's bad because if it was, there wouldn't be such thing as a serial entrepreneur, and there wouldn't be, as many of
Right.
them are out there.
Well, I agree. That makes two of us. Um, it's the most difficult thing that I ever thought that I would love. Put it that way.
Yep.
But speaking of that, so of course, obviously, you got back into it and continued, and then got back into it and got back into it and got back into it. So let's fast forward to present day, if you will. What is sort of you now have the ability to be a little bit more picky, I guess is a way you could put it, in terms of what you get involved in, or picking winners and losers. Let's talk a little bit about sort of the state of commercial real estate, what you see right now, technology, what excites you these days in your space?
So, to be clear, so the company that I have now is 30 Capital, and 30
Yeah.
Capital is really, it's just the name. It started out as Defease with Ease, but when you start doing more things, you can't call yourself, Defease with Ease. You have to call yourself other things because you're doing other things. But right now, we have a very unique perspective because we provide advisory service and capital markets type discussions to borrowers. So we're talking everything debt, interest rates. If you want me to bore your audience, I can talk about interest rates until I'm blue in the face. But so we have this understanding here. So we have this. We also sell technology to help commercial real estate owners and operators and other types of companies become more efficient and understand this world, become more innovative, right? There's so much data coming into the world of commercial real estate. And quite frankly, if you're using an old pen and paper, you're going to miss things. So we have that technology. And then we're also buyers and owners and investors in commercial real estate. So we own apartment buildings, senior housing projects, office buildings. We invest in all parts of the capital stack. So this really unique vantage point of being able to see not only the services and all of this, but also the ownership is all based on commercial real estate. And the tough part is commercial real estate right now sucks, right? I think it's a very difficult market, and I think so. It really hurts when all of your businesses rely on a strong commercial real estate market. So not only are our properties, feeling the hit, our software people don't want to make the investments into software. People aren't doing transactions, so we're not doing a lot of transactional volume. But with that all being said, this is where there is opportunity. And being in a space like commercial real estate for as long as I've been in it, right? I grew up in a family business that was commercial real estate. I watched what happened in the 80s. I've watched what happened in the 90s. I've seen what happened, in the 2000 great financial crisis and what we're seeing today. The thing that gets me so excited about commercial real estate is the opportunity. This is the time for people to step up. And if you're an entrepreneur, you're pretty much, as I said, you don't oftentimes think with both sides of the brain, right? You've got to, and in fairness, you have to go and do it. And I think in commercial real estate, I think we're seeing the same thing. The ones who are going to be bold in this market will reap incredible returns. And I think that's the thing that with commercial real estate that we see is that it is cyclical, right? And yes, it is somewhat cyclical with interest rates and there's other factors, but quite frankly, this is an opportunity for people to step up. And even if you're not a real estate expert, but understanding it and participating somehow really should be on your should be on your thought process, because I do believe that it's temporary. It will come back.
That's great. I mean, I love hearing positive, bullish
Yep.
thoughts. When you say be bold in this market, are you talking about on the acquisition side of things? And if so, you have any particular thoughts on sort of subsector office versus industrial, et cetera?
Yeah, I think to me, commercial real estate, and I'll be addressing the audience that's probably more regional than these big, multinational corporations that invest in real estate, because they have a very different dynamic, right? They're, it's all risk allocation and all this other stuff. But I'm talking about like your mid-market commercial real estate owner operator, for which there's probably about 25,000 of them out there in the country. And their business is to go out and find real estate, whether it's retail, office, multifamily, you name it, and they find investors and they invest it, they operate it, they run a business plan. To that audience, I don't think you could go wrong in any segment, and that includes office. I don't know if office will change. We've gone through these dynamic shifts, right? And I think talk about a time where we're seeing all these amazing changes in our world right now, right? You've got this dynamic. You had COVID, which was like, holy crap. Then you had interest rates that went skyrocketing. You had people who work from home. And so you had all these office buildings going away and all this stuff happening and internet shopping. And it's just changed all these dynamics. But yet there's still opportunity in all of them. And so, yes, I think certain suburban office, love it. Urban, downtown, sure. If I was really diligent about doing it, I wouldn't just go and say, I wouldn't go invest with me in Albuquerque, New Mexico in an office building because I don't know that space and I don't know, I haven't done any research on it. Right. But people who are in Albuquerque who really understand the dynamics. And that's how I think you have to be fairly regionalized to be in that market.
No, but that makes sense. I mean, it's still a good investment. But I think what I hear you saying is, even office, to the extent that there are external factors or other things, that's just a fact that will just impact the price at which it makes a good deal, right?
Exactly.
But it's not something to invest in.
Exactly.
Is that fair?
Yep, that's exactly it. There's always a value, and that's what's great about real estate. There's always a value for real estate. Now, it might not be the value that you paid for it, which obviously stinks, but there's always value. There's always an intrinsic value of land, right?
Right.
Great song, Buy Dirt, right? It's like, and if
they're not making more dirt, right?
Yeah, right. They're not making any more dirt. So buy dirt, right? And so if you think about buying dirt and everything on top of it is, what are you paying for that? Because real estate comes back to the same thing: location, location, location. So if you think it's a good location and you can buy it for what dirt is, or and there's some incremental cost of whatever the building is, I mean that's the way you need to look at it. So that's where it comes back to the opportunity. And it's also an opportunity for operators, people who are in the business, to actually make investments that their peers are not going to make. And by making those investments, they will come out of this market so far ahead of everybody else. And I think that's what we see it. And as I said, this comes down to the advisory side of the business. We know the ones that are making the investment in technology, in their people, in their systems, in the stuff that they're doing. Those are the ones who are going to come out of this and be like, yep, they're going to be well ahead of everybody else. And everybody else is going to be catching up because they're like, I was worried about the market, so I got rid of everybody, got rid of all my software, I've got rid of all my data and analytics, and I'm coming out of this.
Gosh, yeah. So let's talk. So technology within the commercial real estate space has most of your focus, or most of your recent focus with regard to technology, been on solutions for property owners or solutions for sort of industry operators, like the transaction and the sourcing, things like that, or do you even really differentiate that way?
We don't really differentiate between that.
Okay.
So we offer solutions for anybody. We offer everything from corporate compliance, entity management software to debt optimization and equity forecasting software. So everything in between, right? What we see where we're making our big investment is, I know you had Wolf on, and we're making a big investment in AI, and not because it's a buzzword and everybody loves these, these new buzzwords, and it's more of generally what is going to happen, and it's more of the natural language processing, and it's more of the way that if in a typical real estate shop, you have very few bodies relative to the amount of assets that they control. And so when you look at these shops, you might have 4 or 5 people in an organization, but yet they operate $1 billion worth of assets, right? So you need, and each one of those assets creates so much data and so much information. You need to have a way to synthesize it. And it first started out, we were very big on business intelligence tools, where we would take data from your property management systems and all this other stuff, and we would aggregate it together, and then you could sort of visualize it. You could see, your dashboards and your pretty pictures and all this charts and reports and stuff like that. And that's great, but that's the first level. The next level is much more strategic, right? Asking and getting information back. What if I did this? Running simulations, running, that scenario type simulation stuff that is critical to success. Because I think that we're starting to learn in commercial real estate, even though it's fairly slow moving, you can't be reactionary. You must be proactive. And that goes with any business, right? I mean, it's any entrepreneur, anybody starting a business. You can't be reactive to your business. You have to be proactive. And being proactive means using everything in your power to look around the corner, to be ahead of it, to be looking at where is the opportunity.
Yeah. I loved having Wolf on, and he helped me better understand AI and sort of the big picture power that it has. And it was just, to me, it seemed very simple. I had no idea, but he was explaining that, look, another way to think of AI is it's a really, 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 really good predictor of things, right? And in thinking through that with commercial real estate, just at the moment, I mean, I'm curious. It seems to me like if for the 4 or 5 shop property management or property owner that's got $1 billion in assets, it seems to me like you'd be able to feed all of the data and information about all of the maintenance stuff into those things, and then be able to tell when you got to change a light bulb or a street light before it even really goes out. Are things to that level yet in
Well,
Siri?
once again, there's a huge right. There's what's truth, what's reality, right? And what's you know what's fiction, and I think that's the hard part, right? So
I
there's so
got you.
much spin, right? And
I got you. Yeah.
every snake oil salesperson's out there selling an AI solution, and
Yeah.
everything .ai and .io and all this other stuff, but in reality, it all comes down to the same thing. You need to have data in order for this AI, artificial intelligence, whatever the machine is, to be able to understand that data, right?
Right.
So if you're sitting there thinking, hey, I'm just going to throw in my database, right? Or I'm just going to, it doesn't work that way, right? It
Yeah.
doesn't, or it doesn't just come in magically know that you've kept all your files like this, because AI can learn, but doesn't know the difference between elevator expense and, repairs and maintenance, right? It just it doesn't know. So what we are advising people, and this comes back to the same thing with business intelligence, any use of data and analytics comes down to you need to have the data first, and the data has to be organized. Otherwise, it's meaningless. And so, no matter what you do, AI is going to change. This is one of these dynamic shifts in our world, right? Right now, there are two major things, right? There's the AI is changing that dynamic where you are going to it is going to change things, and make our life more efficient and better. But in order to get there, in order to participate, you have to have structured data, and you have to get it, and you have to start now, because later on it's going to be too late.
That's really insightful. And it sort of begs the question for me that's almost AI. It seems to me like AI is sort of creating this other related industry that is sort of data organization, management, and storage. Like, right? Are there is that something that has gotten some traction or that is being discussed in terms of there's some solutions to help put your data in a position?
Yeah, well, but it's the same thing, right? It's always about the buzz, right? We love the buzz. Years ago, that was BI, business intelligence, right? These BI tools, Tableau, Domo, same
Sure.
thing. You need to have structured data.
Power BI.
So when they first came out, the buzz was, oh my gosh, this business intelligence tools are going to change our data. I'm gonna rule the world. And many people know my story of learning about business intelligence and data structures. Was I went to a conference. There was a Tableau salesperson. And Tableau is one of these like Power BI and Domo. It's like a BI tool.
Right.
And the guy sold me on all the potential and the possibility of what this BI tool was going to be. All I had to do is just buy the BI tool. He probably told me, the salesperson probably told me, but I was so excited about ruling the world because of this new power that I would have with the BI tool. I didn't realize that you have to have the structured data for it to attach onto. And so then data warehouses became very popular, which is why AWS and these big data facilities all of a sudden became the big, that was the big excitement in the world. So data warehouse and data management has always existed. It just needs a little spark to get people excited to think about it again.
Gotcha. So maybe a better question. So is the way that people currently track, record, and store data, it doesn't need to be that doesn't need to be executed in any type of different way in order for AI to leverage it.
Correct.
Okay.
But you need to have that first, and most people actually don't. And that's where the trouble comes in, right? It's sure big organizations do, but the small ones don't. And
Right.
Quite frankly, it's the small ones that benefit from this more than anybody else. You go back to your maintenance schedule, right? Wow, if I know that I've got, if I'm recording all this information and now I can be much more predictive, I know that in the next 3 weeks I've got 35 light bulbs that are going to go out, right? Because that's what happens, and I know that they're pretty much going to be here. Well, that helps me project and plan, and buy my light bulbs now. I don't have to have my guy run to the store, all these other things. And that's a small use case. But think about this when where it comes down to the power is taking pricing from a national level, taking all these other sources of data, putting them all together. So you're not just thinking about, oh, okay, well, I'm not just buying these 5 light bulbs or 15 or whatever it is. It is when to buy them, when to change them, how to do it, all this other stuff, right? Waiting, buying these now to do this. It's all about predictive. And that's where the power comes in. Forward, if you look at the commercial real estate market in particular, we've got all these influences, right? You've got tenants or residents or whatever you want to call people coming into your building or apartments. You've got expenses, you've got labor, you've got inflation costs, you've got all this stuff, but you also have this thing that really impacts our value, which is interest rates. So what about modeling future interest rates based upon your property and property levels and all this other stuff, census movement? That's where you start to get very powerful.
Yeah. Yeah.
And that's the excitement. That's where this market is going. And I know people have always been in real estate. I've been saying it for 20 years. Like, the market is going to change. People who invest in commercial real estate, people who invest with people who invest in commercial real estate are expecting better. They're expecting people to really know what they're doing, to be stewards. If you look at the private equity market, like like we buy companies and stuff like that, that market has evolved, right? They are very, very sophisticated machines now, right? They focus on a segment, but if you look at most commercial real estate private equity firms, they're not necessarily like that. They go out, they buy, they raise money, they go and they buy, and that's how they survive, and they sell. And then when markets are going up and markets are great, their business is great and they make a lot of money. But when their business stops, when the music stops and interest rates go up and people aren't transacting business all the time, transacting in deals, they have to survive. And how do they survive? And that's been their challenge.
Gotcha. So are you aware of or engaging with any cutting edge or any companies that are sort of utilizing some of this cutting edge predictive modeling, or call it AI, whatever?
Yep.
Try to stay away from the buzzword that are using this to try that is this driving actions. Like we need to go buy industrial in Austin, Texas, in this zip code because of this.
Yeah. So where we're doing it right now is really, and once again, the nice thing about being a end user, right? We consume our own stuff, right? So so using our own stuff with the stuff that we have, with our technology, we try to solve our use case first. And so the first use cases that we're using are much easier than that. So I travel around, look at sites with my phone, right? So a lot of times I don't have the financials. I don't have anybody with me. So the first use case that we're doing is actually just a very simple AI model that just gives me facts. What's my current occupancy? What's my last occupancy for the last 6 months? What's my delinquency? How much did I spend on roofs this year? Just basic facts that you can query when you come up to it. What's my outstanding principal balance? If I sold the property today, what would my prepayment penalty be? All those kind of things, which are just almost like just pure factual regurgitation. And I know it sounds like, oh, that's just like a fancy chatbot, but it starts getting us as a user to understand how to have meaningful use of your data.
Sounds to me like that's like having a pocket CFO at all times.
It's your pocket. It's your pocket asset manager, your pocket property manager, your property finance major, property CFO, your property investor. Because as long as you have the data, right? Our system right now that we have takes our data, takes our debt data, our equity data, our valuation data, our operation data, our leases, our rent rolls, all that stuff, and it combines it all together. So I can now mix and match based upon those queries. And it really makes it a lot easier, especially as I said, as a traveling, real estate people are basically traveling people, right? We're on the go, we're looking at properties. And so that helps us become more efficient. We're now developing our models to be more predictive, as in when is the best time to sell based upon the forward interest rate curve. When is the best time to refinance? Now, we've been solving
Sub,
this. I'm sorry.
subjectively, you mean, right? Like not for the market, but based on when you bought and what your interest rates are, et cetera. When's the best time for you, the owner, to sell? Is that what you're saying?
Correct. Right. As an owner of a piece of real estate, right, I can look at this and say, okay, well, I've got all these inputs, right? I've got these inputs like, the property, my forward property horizon, right? What is my property going to look like for the next few years? What's my current loan in place? What does
Right.
my cash flow look like? And by mixing those together, now we do that now in our software, where you can run these scenarios, right? I can run a 5-year pro forma in my software, and I can put in my debt, and it will show me exactly where I am, and I can reforecast refinancing and all that stuff. It'll tell me basically for the next 5 years, I can pretty much get a certain net distributable cash flow, basically what kind of cash I can pull out of the property for the next 5 years. Based upon that, though, it it is a lot of manual labor and a lot of simulations and scenarios to get to that. Whereas AI will eventually say, sell third quarter based upon the market, based upon the projected forward curve and where the market is pricing. And if you feel that way, and if you feel like this market is really going to do this, because don't forget, the one thing that we didn't talk about, which is even more important than data, business intelligence, and artificial intelligence, is human intelligence. And that is really the key component for all of this. Because all all AI and BI and data and all this stuff doesn't mean squat without human intelligence to be able to decipher and interpret what they're saying. So back to that statement is, you have to think about this, that these systems will come out and say, based upon this data, but you as a human have to say, yeah, I sort of believe that. I don't really believe the Fed is going to cut 12 times between now and December of next year. I think they're only going to cut 8 times. Okay, well, what does that mean? Right? So now being able to go back and run all this calculation, all this stuff, right? Go back to how great it was when I had my Lotus with WYSIWYG.
Yeah.
Now I'm talking about this unbelievable algorithm and superhuman level technology that's running and interpreting all of this stuff for me. It's just quite remarkable, quite impressive.
That's amazing. It's amazing. So if someone were to ask you, if someone in the industry were to say, look, I mean, I'm an owner operator. I've got, 5 buildings in Skokie, Illinois. I'm really interested in technology in the space. Where would you direct them?
So I think the first thing is, what are they trying to achieve? What are the goals that they're trying to achieve? And then figure out sort of more strategically off of that. I think that to me is, because you can get lost in technology, right? I mean, technology is
Sure.
fun, technology is exciting. And a lot of times people misplace innovation and technology. They use them interchangeably, but they're very different, right? Doing something different is innovative, right? Using software or technology is technology. And that I think is where we try to push. I believe in innovation. I don't necessarily push technology. I believe in innovation. And so I think a lot of times when we talk to people, first determine, is it innovation or is it technology that you want? Once you know that, then it is, okay, well, what are the things that you're trying to achieve? What are the goals that you're trying to achieve? And what can you do to achieve that? A lot of people, hey, I have organizational problems. My team is all fractured. We're all remote. We're all doing this stuff. We're all going for this stuff. Okay, well, maybe you want to implement OKRs. What are OKRs? Oh, well, it's an innovative approach that software companies have been using, and it's about objectives and key results, and it's a way to get your team all aligned. It's not software, just something innovative, right? So it's things like that.
That's really interesting. The the, distinction between innovation and technology. Um, There could be a whole other discussion on that.
Good. I wrote a book all on it. So yeah. So
Well, tell us about it. Where do we get it?
oh, so yeah, you can get it on Amazon and Barnes and Noble and all that stuff. It's yeah,
Is it building
it's
or beyond the building?
Beyond the building. Yep.
Yeah.
Yeah, it's called Beyond the Building. It's basically just a framework of innovation that I've used for my own companies and my real estate company, taking sort of those concepts, right, of thinking differently, thinking outside the box, but applying them to my world of commercial real estate and OKRs. I mean, I've got a section on leadership, and I've got a section on OKRs and planning and data and analytics and all that other stuff. But quite frankly, yeah, in fact, I received more comments from entrepreneurs and business people on it who used it, even though it's really for commercial real estate. It's actually, I get more comments from people on that say, "Wow, I've taken that for my own business."
Oh, that's great. That's great. Well, I'm definitely going to check that out and encourage the audience to check that out as well. Do you guys at 30 Capital, do you guys raise funds, or are you a sole sponsor with your acquisition?
We're sole, yeah. We
okay.
We deploy our own capital. Yeah, we've been doing that. Just sort of it's one of those things where we have we focus on our own business, we focus on our own deals and investments.
Yeah, no, that makes sense. Robert, early in the discussion, you mentioned, really good entrepreneurs. And I don't want to misquote you, but what I heard was that really good entrepreneurs, it should at least try to see around the corner, right? And the good ones sort of can. Do you feel like you've got a good view around the corner in commercial real estate for what's coming up?
Yeah, I like to think I do. Time will tell, right? I mean, it's like anything, right? It's like, am I going to be 100%? No. Will I be 50? Hopefully, right? It's I think the thing is, and just to make sure we're clear, an entrepreneur, to be a successful entrepreneur, it takes not only the idea, but execution, right? And I think that's sort of the key point. I mean, there's millions of ideas, billions of ideas. But it's the idea and execution, and it's really that unwavering must do it is really. I mean, I think that's where the ones who must do it are the ones that typically will find a way.
Right. That's great. That's a great point. And by the way, when I say see around the corner, I don't necessarily mean to predict what the market is going to do, right? But see around the corner in terms of the types of innovation, or that maybe this is the best way to say it, the areas or aspects of the market that are most ripe for being, for innovation or disruption or what have you.
Yeah. Well, I think there's clearly one that is very apparent to us, and this is where we see huge opportunity for anybody in commercial real estate, whether or not you're an owner, operator, or investing in it. And a lot of times when you look at these firms, and I mentioned these shops, these 25,000, what they would call commercial real estate private equity firms, or investment shops. These are the ones that take the money, invest, and stuff. If you look at these organizations, typically there are. Let me put it this way. There are two ways to make money in commercial real estate. There's real estate operations, and then there's debt operations. And there's really only two levers that you have, right? You buy the real estate, you improve it, you fix it, you paint it, whatever. You do the stuff to make it more valuable. Most real estate shops, almost all of them, will say that they do a really, really good job doing that, right? That's why they get investors, because they know the market, they know real estate, whatever it is, and they focus on that aspect of the spaces, focusing on the real estate. Very few have the same expertise or conviction for their expertise in the world of debt. And understanding that debt, as I said, is a lever in commercial real estate, right? You have real estate values that go up and your debt is optimized, you will make more money. If your real estate goes up and your debt is not optimized, you won't make as much money. It's a very simple sort of concept, but yet it's sort of it's it's overlooked in the majority of the market. And so what we're starting to see, where we see the innovation, where we see people really going, and which is really exciting, is that people realize you have to be a real estate expert and a financial engineer to be really successful, to be at the top of the game, to really show alpha in commercial real estate. You have to be able to pull both levers. You can't just get away with just buying property, flipping it really quick. It doesn't work like that. So that's where we're starting to see it's the dynamic shift. And it goes back to what we were talking about with these private equity firms, right? Private equity firms, they buy they buy these companies and, whatever. Now they buy companies and it's a financial re-engineering. They're operational efficiencies and then there's financial engineering. And that's how they're creating their returns. Real estate is going to that direction.
That's fascinating or very thought provoking. And so when you mentioned these 25,000 entities, you're just referring to non-owner operator commercial real estate owners, right? Like, so
they're owner operators. They would be considered owner operators. These are groups that, as a business, they go out and they get investors and they buy real estate and they own and operate that real estate.
Right. Okay. I just mean like if it's not if you've got a shop and you own the building that you're operating in, it's folks that are in the business of investing in real estate.
Correct. That's just good.
Yeah. No, that makes sense. I just wanted to clarify that.
Yep.
Clarify that for the audience. And with the financial engineering part of it, you're not, at first I thought you were just distinguishing between sort of the arbitrage on the transaction, buy low, sell high, versus does your revenue exceed your debt on an ongoing basis? But it sounds like that is it fair to say that these commercial real estate owners, these more or less 25,000 entities, they need to take a lesson from the world of private equity in terms of deriving value and treat commercial real estate like the private equity firms treat business or operating businesses?
Yeah, I think that's a great analogy, with the understanding that it's these two levers. You've got debt optimization. So when I go back to this debt optimization, what I mean is, I buy a property. I'm a real estate sponsor. I buy a property. Well, I'm going to go get a 10-year loan on that. So I'm going to go get a mortgage for 10 years, even though I might sell it in 3 years. Well, these loans have prepayment penalties and all this other stuff. So that might not be the best situation for me. Or they might have tremendous value and it might make sense for them to pay that prepayment penalty. So they're going to refinance and pull money out and hit their promote and all these other things. So they're maximizing this. But a lot of people in real estate, that's a concept that is not comfortable for them.
Okay.
Where it's looking at this, and a lot of them, we've been told a lot of times people say, well, I just get my loan, I set it and forget it. Well, you're leaving half the return on the table. And so back to your point, you're absolutely right. That's like saying you would never see KKR or Carlyle or Summit Partner or any of these big private equity firms just say, we're just going to buy this company and let it run itself, right? It's like you don't do that, right? And
they go in and they say, these expenses can be capitalized. We need to put these on the balance sheet, allocate costs this way. And there's a lot of lever. There's a lot of knobs within the lever, maybe, right?
Yep. Yeah. And so they're going to work on these companies, and then they're going to turn around and say, okay, well, look, we know that exponential returns come from leverage, right? Levered returns. This is a concept that every real estate person knows or should know, right? So you've got levered returns. And so now all of a sudden you're like, geez, well, levered returns can be adjusted based upon my leverage, clearly. So being able to optimize that and looking at it and understanding in that regard is where it's going to be, and where it's going to be exciting, is that people are going to realize that this is this is a lever that we need to be looking at in order to maximize our returns and our returns for our investors and for ourselves.
That's great. That's interesting. I'll be honest. I'm surprised that some of these. Well, I'm surprised it's not more common to optimize or maximize revenue based on these other variables. But
well, they maximize the. Be clear, they do a really good job on the real estate, right? So you can go to
sure,
any one of these shops, and they have beaten up their landscape contractor to a point where the poor guy's probably not making any money, right? And they know trash pickup is the best price they've got, and so they're really good at that side of the business. But because financing is a little bit more, it's not their day to day, right? Because you're not refinancing every day, right? You're not buying swaps and caps, and you're not looking at interest rates every day and forecasting. It becomes a little bit different, and it's a specialty, right? You're not, it's like I go to my primary physician. I don't go to my dermatologist every time, right? But really need to know my dermatologist, right? I know that part of being healthy means having your dermatologist check you. So
gotcha.
That's sort of the analogy.
No, that clears it up, and I think that's a great analogy. So you have been so kind with your time. I very much appreciate it. I got one more question that I'd love to ask. I'm just curious of your thoughts. So much has changed recently. You explained it very well. We went through COVID, great financial crisis, interest rates, AI. How has I feel like we're on the precipice of a I don't know, revolution, maybe too high of a word, but a transportation change or shift, right? With like self-driving cars, these robotaxis, a lot of, and I'm not an expert in commercial real estate. I'm the furthest from an expert commercial real estate, but I would imagine, and I would assume, it might be a terrible assumption, that a lot of commercial real estate is tied up in parking. Is this going to significantly impact the commercial real estate industry, or is that like a great question, Barry, that no one knows?
Yeah, no, it's a great question, and this is where it's great. This once again is why real estate is such a wonderful business, right? It's about thinking, right? It's about using that HI, that human intelligence, right? Because right, you could look at a BI tool and it's going to show you, yep, like or AI is going to tell you, yes, self-driving cars are doing this, and parking spaces are going down. But yet there's some dynamics to that, right? Because the municipalities control parking density, right? So, yeah, I don't need 10 spaces per 1,000, but my municipality requires it, or 2 spaces per unit, right? Because that's what their zoning requires.
Yeah.
And so now you start to fight with these organizations, which is what is real in the market and what's really happening versus your antiquated, yes, I have to have 2 parking spots for every unit or a parking spot per unit. And yet I'm in an infill location, and municipalities are starting to get better. So don't think it's not everyone, but that's the kind of mentality. It requires change. In order for it to be effective, it has to incorporate a whole bunch of different parties. It's not just one party changing, right? Just because you had that question, it's a great question. What do you do with all this parking? What do you do? Do you need all this parking? No, you don't need all the parking, right? But change will have to happen when the city planners, the towning, and all the zoning say, you know what, actually, we can change our requirements to reduce that parking.
Yeah.
And we can let people get rid of that part.
Yeah, and perhaps it opens opportunities, right? So that a business that operates that's a constraint that they have historically worked with. They've got to find a space that has crazy amount of parking access, but maybe it opens up additional locations that they can go in now that it isn't as much of a a requirement or need. I don't know. I have no idea what I'm talking about.
No. But it's a great point. But you take this and just extract on that. Let's extrapolate there. Okay, so now if I'm a business, I'm a small businessman, and I have a business. I do landscape work, right? And part of my landscape contract for my commercial customers is I do their sweeping of their parking lot after after snowstorms, right after when it comes down, and I sweep their parking lots twice a year. Well, that might not be as good of a business, right? You might want to be thinking, you might want to be looking around the corner and saying, I don't know about that, right? It's, I don't know if that's still going to be the case. Do I really want to buy brand new equipment to do sweeping when the useful life of them, the usable life may be only a couple of years?
Yeah. Yeah. That's so true. And that's a great point for entrepreneurs. And you've done it enough where you understand what's important, what's not important, what's sort of the lip service or the buzzword of the day versus what really is important. So I just can't thank you enough for spending the time to share your experience, your thoughts, and your opinions with us. It means a lot to me and to the audience. And I mean that. So,
no, Brandon, I really appreciate it. Thank you so much. You made it easy. I'm sorry. I probably, just sat there and over talked, but no, I really appreciate the time and being on the show. It's an honor.
Well, thank you. So before we cut it off, is there anything that we did not get to or a question that I did not ask that you were hoping we would talk about or that you'd like to?
No, I don't think so. I think, we covered stuff. I think it's, we mentioned the high things, right? It's entrepreneurship is all about being not only innovative, but also hardworking, right? You can't just come up with the idea. So I think that's really the key thing.
Okay. Awesome. Well, again, thanks, Rob. We appreciate it.
Yeah, my pleasure. Thanks, Brandon.
Don't forget, everybody, you can find Boundary Breakers in a lot of places. You can watch our episodes on the Boundary Breakers YouTube channel, or you can listen to each podcast on Spotify, Apple Podcasts, or any of the other major podcasting platforms. Thanks for listening.